Good afternoon and welcome to Biztech's Asian Midday Marketwatch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, thanks for coming in.
Always a pleasure to be here, Brian. Thanks for having me.
Now, Vishnu, lots happening in the markets, but before we start, let's take a look at how the crypto markets are performing. Bitcoin has dropped further over the weekend. It's now 44,669. It's down 1.48%. Ethereum is at 3,275. It's down 1.24%. If we look at how regional markets are performing, very mixed. Nikkei is down 0.21% at 30,319. Shanghai Composite is at 3,706.73. It's up 0.1%. The Hang Seng is down almost 2% at 25,686.91. The ASX 200 is up 0.09% at 7,412. The Kospi is down 0.24% at 3,118.19. Closer to home, Bursa Malaysia is down it's down 0.69% at 1,565.14. And rounding out the numbers, we've got the Straits Times Index, the SGX, which is at 3,069, down 0.96%. So I stand corrected. It's mainly a negative market across the region. What are your thoughts on how markets have performed, Vishnu?
Well, I don't think it is an absolute surprise that it is a negative start to the Monday, given that there were already trepidations in the market on Friday. And we did start off with a little bit of China risks, with a US dimension to it, because US was taking a look at Chinese subsidies. So it was assumed to be an extension of US-China conflict via the trade front, amongst others. But of course, China risks have got many dimensions to them. And you've got further crackdown on tech monopolies. You've also got a lack of clarity on how much tightening there's going to be in the property sector. And whatever little consolidation and silver linings in the form of credit easing for the SMEs has been offset by the fact that the broader tightening of credit excesses has not been removed from the picture either. So there's the whole host of risks swirling around the region, mostly in the form of China.
Okay, and Vishnu, I'm going to bring up some examples of what you just proposed, you just mentioned right now. So you talk about some of the risk weighing in on the market. So Alibaba dropped just over 3% because Beijing wants to break up Ant Group's Alipay and force the creation of a separate loans app. So that's one sort of risk that's happening. The second sort of risk is the clampdown on the potentially the EV markets, because all the Chinese electric vehicle stocks fell after China's industry minister said that consolidation is needed in the sector. That's too many EV makers. Third risk, alluding to the property sector, which is already playing out, is Soho China, a property developer, plunged almost 35% because Blackstone was supposed to go through and put a $3 billion bid to buy the developer. They've now pulled out. So this is actually playing out these risks in terms of actual deals that are happening.
Absolutely, Brian. So I mean, sorry, go ahead, please.
Go ahead. So you see, there is thematically, one of the things, Vishnu, that strikes me now is the following. So you've had, China is, after all, a communist country. And I think the backlash has finally come home to roost in terms of income inequality. If you look at thematically across all these clampdowns, everything is about them, of course, as a communist country, having control. And also it's about reducing inequality. I mean, what are your thoughts on that?
I mean, you took the words right out of my mouth. I was going to quote Master Yoda on that: control, control, control. You must learn control. And I think here, we probably need to still realize there's a duality to it. the duality being, and as you rightly pointed out, it is about control and inequality. And inequality, to be skeptical about it, stems from control. So the Communist Party must have control over the state's organs and have policy as well as moral authority, which is why earlier we had some of these social ills coming under the microscope as well, because that's the moral authority. Control over data is very important because this forms part of the social security fabric as well as the surveillance aspect of it, which is why I think the tech monopolies are being targeted in terms of how much control they have. And in particular, when you get new technologies like Ant going into the realm of financial control, this is where I think authorities justifiably need to be concerned about the underlying risks that are taken on by new platforms. But equally, there's also the element of the sheer data control that they are not comfortable residing in the private sector. As you said, it's a communist state. And so that concept of control is somewhat different. The other aspect of it, of course, is the financial stability risks, which is why I think the property sector has become a little bit of a behemoth. But the problem here is that in trying to control that, they may inadvertently end up bursting the bubble and causing contagion risks. And so those are on one side. But on the other end, I think it's not that China is not aware that it has got a lot of crosshairs trained on it, particularly from the US, which means they need to grow some segments. And those segments involve, I think, the chips industry, the very high-tech industry. So the so-called the harder part of tech, I think China will be looking to grow. The softer part of tech, including those that have a reach into platforms and the social sphere, those I think will have to be reined back and reined in. And if you think about it, the consolidation in the EV markets is a larger scale, it's a different iteration, but not unlike what we saw happening with solar chips and the solar panel industry, where China just mushroomed, prices plunged, and then they needed to consolidate. And I think here the economies of scale is coming into play. The trouble is that the policy opacity around this time, I think, might overwhelm some of the strategic goals if some of the risks are not checked in time.
And also, we've got to look back at history. This is a playbook that happened about 15 years ago, I think, or 10 to 15 years ago in China with the automotive sector anyway, when they basically declared you need to consolidate, you were too many players. And what ended up happening is they built some global champions. I mean, literally companies of scale, because that consolidation took place. So we're seeing this movie basically being rerun now in a different guise right now.
I mean, I totally agree with you. Like there would be these industries, including EV. There is no question that China is leading the charge, and it's going to end up where, as not only as the test bed for the new technologies, but also where perhaps the economies of scale would dictate that that's where the production frontier as well as the technological frontier could end up. So there is a lot of potential, and some of these are that kind of a creative destruction cycle that we are going through. Some of it is Schumpeterian, but others are not as bright. I mean, those aspects of the social re-engineering, I think those aspects of it could be a bit riskier because, and the biggest risk visible to me is the opacity around it, whereby China can suddenly introduce regulations and totally destroy the profit motive and viability. Those aspects, and BlackRock being an example, could see foreign capital pulling out. And at this stage, I think a lot of the Chinese champions would still need the ability to tap into international capital markets. The inability to do so could turn out to be a crippling mistake.
Now, moving away from China now into events and data points of this week, what should we be watching out for that will move markets?
I think markets are feeling a bit nervy, so they're easy to move. that's the starting point. As you and I discussed, the China headlines are going to occupy center stage and dominate, but we have got a lot of sideshows. And I think when you come to the policy space, US CPI, that'll be tomorrow night, is something that markets will watch very closely to see how sticky CPI has remained. As a quick recap, it has peaked and held at a 13-year high. So markets want to see how that evolves. But towards the end of the week, equally important would be the U of Michigan consumer sentiments, because in August, this collapse back towards COVID lows. And so whether there's a recovery there could also be very important for market sentiments. So these two data points may be something that they watch. You got the whole host of Eurozone CPIs and some other second tier data coming out. In Asia, the CPI iteration will play out for India with very different prospects though. It is not so much about holding back tape or anything like that, but rather the kind of policy dilemma that the RBI faces. But other than that, I think this week will be more about headline risks as we head into next week's FOMC. So next week's Fed meeting and this week's China risks, I think that those are the big backdrops against which every other data iteration will play against.
Now, Vishnu, thanks very much for coming on the show and for your insights.
My pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on Biztech's Asian Midday Marketwatch. I'm Brian Fernandez. Check out our website, www.biztech.asia, for business and technology conversations. Please also like and subscribe to our various platforms. Thanks again for tuning in.